In this video, I'm going to show you guys how to catch perfect entries using purely and strictly market structure, right? So it is kind of the smart money concept, but we're dealing with market structure. We don't have to use inefficiency, we don't have to use order blocks and stuff like that. We're just looking at the raw price action, right? So as per norm, when I look at my charts, I want to start from the higher time frames, right? So I want to see the trend that the higher time frame is in, go all the way down to my entry time frame, which is 5 minute down to the 1 minute time frame, right? So as we can see, EU, we're on the 4 hour time frame, and right here we're in an uptrend, right? So I don't need to go all the way from down here to analyze my chart, because I am focusing on price that is here right now, right? So when I look at this chart, I want to identify my highs and my lows, right? So high, my low, my high, my low, and then my high, right? And by now everyone should know why I label this as my high instead of these and so forth, right? Because all of this is just complex pullback on the higher time frame and a trend on a lower time frame. So this is it, this is literally it, right? So every higher low should create a new high for it to be valid, right? So right now this is my previous high low and my previous high, right? Nothing else matters to me at this point, right? None of this matters once I identify the previous high and the previous low, right? So price is here and price is trading within this range on the 4 hour time frame. So the only time within this area when I am going to look for a sell where the 4 hour time frame is concerned is when this higher low is broken, right? So now this higher low is broken right here, and we saw market create a lower high. So now we are in a downtrend, because from this high the market create a low and then a higher low. So we are in a downtrend as opposed to an uptrend now, because we broke this higher low. So we're not focusing on that anymore, right? Our main focus now is here where the market create this higher low and then broke structure to create a new low right here. So we are literally right in this zone. So now we have a new lower high and we have a new lower low. So this is our current price zone that we're looking at. Nothing else matters. And what this is saying is that once price is trading between this 4 hour, we are still in a downtrend until this high lower high is broken, and we are going to continue the downtrend on the 4 hour time frame when this lower low is broken. However, within this zone on a lower time frame like the 1 hour time frame, the market will be trending, right? The market will be trending, and you know that from a lower low we need to create a lower high to continue that downtrend. So we would be looking for the market to come back to at least equilibrium price. Now price came back to equilibrium and price still break that new structure, forming new highs. So we are looking for price to actually head to our premium price where we will be looking for sells, and if the market continue we will be looking for buys once the 4 hour lower high is broken. But how do we know that the market will reverse here, or where will the market form that new lower high? How do we know that it's not gonna break to the upside, right? Now this is where lower time frame structure comes in, right? So note that we identify our premium price where price is likely to reverse, and we identify our 4-hour trading zone. We're trading between this zone. Now we're going to go on the 1-hour time frame, right? All right, so we are in a downtrend on the 4-hour time frame. It's clear because we broke that previous higher low, right? And now we're trending down. But this complex pullback, right, for the 4-hour is in an uptrend on the 1-hour time frame. So this is our low, this is our high, this is our higher low, and this should be our new high, right? This should be, I say should be because we don't know if market is gonna turn here as yet, right? We don't know that yet. How we should know is that we are gonna look at lower time frame structure once again, right? So it's still trading within this zone. Remember, we're trading within this zone just the same. So let's go on the 15-minute time frame, which I call my intraday time frame, right? So remember, we still have this 4-hour zone that we're trading in, and we didn't break to the upside, and we're not yet to the downside either. We're just in this zone doing some complex pullback and lower time frame, right? Now this is the 15-minute time frame. It's evident that we broke structure on the 1-hour time frame right here. So we had this break of structure. So it's evident that the 15-minute is in an uptrend. Right? So it's evident that the 15-minute is in an uptrend. But remember, this is in premium price on the 1-hour time frame, right? On the 4-hour time frame, it's in premium price. So we were looking at possible reversals. Now this is how we confirm on the 4-hour that this is the area where the market is likely to reverse, by looking at lower time frame trend, right? Now looking at this, we're going to identify 15-minute structure, right? So on the 15 minutes, we identify this low right here, this high, this low, this high, this low, high, low, high, low. Market came back and basically retraced at the same place. So this is not a new low basically. So we're still in that uptrend. This failed to create new highs, so this is not a high. However, this is the high that the market created, right? And then the market pushed down, created this low, right? And then the market pushed up, created this high. So we're still in an uptrend until this point right here. Then the market pushed down, created this low right here, and then it failed to create a new high right here. So now possibly market could be in a downtrend, or it's gonna do a possible reversal at this point. Another confirmation for possible reversal is divergence, right? So if you look at this area right here, right in the premium price on the 4-hour time frame, market slowed down, right? And basically it created divergence, which means that market could be doing a possible reversal or a possible change of trend. And we confirm this is a proper divergence based on the trend of the market, right? So let's look at this. So this point right here, basically, and then this point right here, right? So if you look at this, the market is trending up, but the divergence is down. So this means that there is a possible reversal at this point, and then we got another confirmation, whereas the market failed to create a new high, right? Oops, sorry. So the market failed to create a new high right here. So this means that we're gonna possibly be in a downtrend at this point right here. So the market pushed up right here, and then the market broke structure. So that is another confirmation that the market is now in a downtrend. All right, so when we see this on the 50-minute time frame now, this confirms to us that on the 1 hour time frame, this is the area where the market wants to create that new high. Because remember, on the 1 hour, this is our low. What's up with this? All right, so on the 1 hour, this is our low, this is our high, this is our high low, and then we're looking for the market to create the highs, right? So now we're looking for the market to actually push down to create a new higher low to continue the uptrend on the 1 hour time frame, and we're looking for the market to basically continue the downtrend to create new lows on the 4 hour time frame. So that confirms that the 4 hour time frame is still in a downtrend, and the 1 hour time frame wants to create a low. So either way, both of them is telling us that the market wants to go down, and then the 50-minute time frame confirms that the uptrend right here is broken and also wants to continue to the downside. So we have three confirmation that market wants to move to the downside, right? So we were trading within this 4 hour zone. We're still trading within the 4 hour zone, but let's close in, and now we're trading within this 1 hour zone right here. So once this 1 hour zone is not broken by the 15-minute time frame, we are gonna go in a downtrend, right? And until this low breaks, then we are still in an uptrend on the 1 hour time frame. Note, until this low breaks on the 1 hour time frame, which is the 1 hour higher low, we are still in a uptrend on the 1 hour time frame. So we can always push to the downside, create that new higher low, and then push back to the upside, right? Because remember, we don't know if the market wants to break this 4 hour lower high as yet. So we have to wait on structure to tell us the next move, right? So let's go back on the 15-minute time frame now, because we're going all the way down to the 1 minute. All right, so first let's identify where the market could possibly create that 1 hour higher low. So here we have this point of interest, and everybody should know what point of interest is by this point, and know how we draw point of interest and stuff like that. So this is a point of interest based on an order block that was left on the 4 hour time frame, right? So this is our point of interest, and if the market should push down from here, we are looking for the market to create 1 hour higher low here. Or if the market breaks, we're looking for the market to break this higher low on the 1 hour time frame, push back up, and then continue down to break this area, which means that the 4 hour time frame would also be continuing that downtrend. All right, so let's look back on the 50-minute time frame now. So we're trading within this 4 hour zone, and now we're trading within this 1 hour zone right here. So let's try to find a zone on the 50-minute that we can trade between. We're closing in on structure, right? So right here we saw where the market created this divergence, right, which means reversal. The market failed to create new highs, which means that the 50-minute time frame trend could be possibly changing, right? We broke structure to the downside, so now this creates a new low. So this is a new low. Market pushed back to the upside and failed to create a new high, so that means the market is now creating lower highs, right? So the market is now creating lower highs. So on the 50-minute time frame now, we are trading within this zone right here. So we're closing in. So we're closing in on we closed in on the 1 hour, the 4 hour, and now we're closing on 15. So we're looking just within this zone. Once this zone right here is not broken and it don't break to the upside, we are still in a downtrend, because this is the downtrend now on the 15. And once this area is not broken, we are still in a downtrend, right? So we saw market push down. All of this is just a correctional move, because we're trading within this zone. Once it is not broken, the market can do anything right here. So within this zone, we saw market created liquidity, right? We saw market created liquidity. And note the time is now 22, 23, 12, between 12, somewhere there, and we don't trade that time. We're waiting strictly for London session, right? So the market can do anything it wants right here. This is what Asian session does: consolidate, create liquidity, and then take out liquidity, and then market move in London or New York session, right? So we don't trade within this time period. All right, so note we're still between this zone right here. We're still within the zone, right? Market cleared this liquidity, right? So we cleared that liquidity. And now, because the market pushed down like this was just to push the market up to clear this liquidity. Once we did not break this area, we are safe to take our sell over here. But how do we know where the market is going to reverse here? We don't see a point of interest or anything here. No, but we can also follow structure. So this is the 15-minute time frame. Now we are going to go on the 5-minute time frame and see what this structure is doing. So if this structure here creates reasons for possibly down move, we can always take entries based on structure here. We don't have to have a point of interest, but we're just watching structure, watching this little area to change from an uptrend to a downtrend. And that is literally what we're gonna do. So we're gonna go down on the 5-minute time frame, right? So let's go on the 5-minute time frame. So now we're on the 5-minute time frame and we're focusing on this area. Once it don't break this 15-minute zone, which means that the 15-minute is still in a downtrend, then we are good to go. So let's identify the structure on the 5 minutes. Let's change the color for that as well when you use purple. So market pushed to the upside, market broke structure. We're talking 5-minute here, right? Created this high, then market created this high low, market created this high, then this high low, then this high, then this high low, then this high, then this high low, then this high, right? And note market broke structure, right? So you can move it from here. So market from here to here, market broke structure, right? So market broke structure to the downside. So now that market broke structure, we have a new zone to focus on, right? Which is from here on the 5-minute time frame. Is from here. Let's make this line huge so we can differentiate, and we don't see where the market starts to reverse yet. So let's wait and see. Alright, so market went up. So basically the zone is from here to here. So this is 5-minute trading zone now. So we're trading within this zone, right? So now that we are on the 5-minute time frame, if we were supposed to look at this zone for possible reversals, right, we have to go on the 1-minute time frame. So what this is saying is that the 5-minute is now in a downtrend along with all of the other time frames, right? So along with the 4 hour, the 1 hour. Well, the 1 hour is the only time frame that is not in a downtrend. The 4 hour is in a downtrend. the 15-minute is in a downtrend, the 5-minute is in a downtrend, and now we're going to look to see if the market is in a downtrend on our entry time frame, which is the 1 minute time frame. So currently on the 1 minute time frame, this is in an uptrend, right? So this is 5-minute zone and the 1 minute is in an uptrend. So to get an entry, what we're looking for is the 1 minute to turn from bullish to bearish, and then we can start looking for entries to the downside. So bear in mind, we don't just look on 1 minute for entries. It have to confirm with higher time frames. Remember, this is a zone where the market should create 4 hour lower high. It created a 1 hour high, which means that from that high we need to create a higher low, which means market need to reverse to create that higher low, right? On the 15-minute time frame, we broke an uptrend. So basically this 1 minute entry is just for entry purpose. The 1 minute time frame is just for entry purpose, because we would have already note all of the reasons why the market is in a downtrend. So you can't just be on the 1 minute time frame looking for entries. No, you have to confirm it with all of the other time frames, right? So now let's go on the 1 minute time frame and look at this structure. Look at what this structure is doing and wait for this structure to give us that bearish move once it don't break this area. If it breaks this 5 minute, then it failed, right? So we're looking for this area to reverse before breaking. So on the 1 minute time frame, let's identify the 1 minute structure now. Now this is where it gets tricky and entertaining, right? So let's use a different color for 1 minute. Let's use blue, darker blue. Okay, all right. So the market pushed, the market didn't break structure here, so this is all a complex pullback. So the market pushed up, push up, and then we can use this as the breaker structure, and then market pushed down, created that higher low, and then market push up. Let's see if it breaks or it holds. All right, so market push up and it holds, right? Market fell. So we're looking for the market to create a new higher low and then see what's up. All right, so the market basically created the high low here. So what we're looking for now is this high low to be broken, right? To say that the 1 minute is now in a downtrend, right? So let's see what's up. All right, so now we are on the 1 minute time frame. We can't possibly go on a lower time frame. We can use the seconds time frame, but I don't use the seconds time frame. So we could use the second time frame to see what is here or whatever, but this is where I start taking my entries. Now the market broke structure here, right? The market broke structure, so we don't need to go on any lower time frame. So this is it for entries, right? So the market broke structure. So if the market broke structure, what we need, if we are in a downtrend, right, like the market showed us here, because it failed to create new highs, right? So we're in a downtrend. So if we're in a downtrend, market creates a lower highs and lower low in a downtrend. So if the market broke structure and created this lower low, obviously we need to create a lower high to continue down. So in this case, I don't see a proper entry here where order block or inefficiency is concerned, but based on structure, right, and theory of the market, and how it works, like the stock market, we need to be at premium price to get that sell, at least at equilibrium price. So if I use my discount and premium fib from this low, from this high to this low, I see that my discounted price is at this 50% right here, and this is where I would likely take my first entry, depending on the stop loss if I extend it to the 100%. So if I extend it all the way to the 100%, the stop loss is 3.1 pips, and that is fairly well. Once it's not above 5 pips, I'm good. So this is my first entry here, right? So this is first entry using my discount and premium fib, right? So let's see what happens. All right, so market tapped in. I went about, say, a pip in drawdown, right? 1 pip in drawdown, that's good. Then the market pushed down, market broke structure. Now this is where most smart money traders get stopped out of trade or fail, right? Because they're looking solely on just order blocks or inefficiencies, and they're missing out the important thing, which is market structure. Market structure is the most important thing in the market, right? So instead of looking at this order block right here, right? Instead of looking at this order block right here, remember this is 5 minute structure, right? This is 5 minute structure. And if I use my premium and discounted fib from here to where it broke structure, let's see if this is where the market wants to create that low. Okay, so yeah, more than likely. So if I use my discounted fib on this 5 minute structure right here, right, notice this entry here is not even at equilibrium price, right? And if the market break a 5 minute structure, right, we're not looking at 1 minute structure here again, right, because we already got first entry based on 1 minute, right? And this is also based on the 5 minute high that was the 5 minute high that failed to create new high, right? So we got the entry based on that, right? Now it broke 5 minute structure. So if it break this 5 minute structure, obviously the market is supposed to create a lower high on the 5 minute time frame, right? And where is the market going to create that lower high? It cannot be here, because this is not even equilibrium price, right? And what I taught you guys is that if market don't reverse to at least equilibrium price, then do not take that entry. Let it pass if it does, but do not take that entry, because even the stock market, no one wants to buy at a high price. Everybody wants or sell at a low price. Everybody want to sell at a high price and buy at a low price. So in this case, we want the market to go back to at least equilibrium price, which is here, and this is above the point of interest, and premium price would be somewhere up here, right? Anywhere above the 50. So I wouldn't take an entry here based on the fact that it did not hit 5 minute this equilibrium price or premium price, right? So let's play this and see. Look at that, easy the market broke through, because everybody waiting to sell at a higher price, right? Now let's continue. Let's put back this where we got the first entry. We got the first entry around 50% here. All right, so that's first entry. It was 3.1 pips. Yeah, 3.1 pips. Okay, so let's look at the market. So what we're waiting for, the market is now going to create 5 minute lower high. So we're looking on the 1 minute for a breaker structure when it creates that lower high, right, to say that this is where the market wants to reverse, right? So let's look at this. All right, so here the market create a low, the market create a high, the market create a higher low, right? And basically the market failed to create a new high right here. So that is giving us a cue that the market will possibly reverse from this point right here, but it is not confirmed as yet, so we need to see that breaker structure. All right, so look at this now. The market broke structure aggressively, right? So the market broke this structure. So this structure failed to create new highs, and then it created a higher low, and then market failed, and then it breaks structure. So our next entry will be at this inefficiency that is created right here. Let's change the color of this to maybe green. Okay, so here is our next entry point right here. Boom, stop loss above 1.3 pips, right? Let's play this. Market tapped in. Move this over a little bit. All right, so look at this. We broke structure again aggressively right here. Right, and then market left another inefficiency right here. So this could be another entry right here. And stop loss above, same 1.3 pips. Boom, market came back, tap in, and I am looking at this area to take another entry here because market, holy shit, yeah, because market broke structure aggressively right here again. So being that market broke structure here aggressively, coming from that lower high, we can now have all entries at break even because the market is not supposed to break. If this is a true downtrend, the market is not supposed to break above this area again, because that will mean that the market likely going in an uptrend. So we could be looking for another entry here possibly, right? And now notice we broke out of this 5-minute zone, so the market is now in a downtrend on the 5-minute overall. Well, we were in a downtrend from the moment the market break here, and then it created this lower high, and then market pushed down, right? So that's 3 entries, and we are going to go on the 1 hour time frame to actually set our target, because remember our target is, let's go back on the 5-minute, extend these. I remember our target is all the way down here, because we want to create that 1 hour higher low, right? And the down on the 4 hour is also already in a downtrend. So if this hit takes profit, we're looking at a 1 to 49, a 1 to 50, so that is basically 1 to 100, and then a 1 to 22, so that is basically overall that is 3 to 122. So that is very good. So you're risking 3% for 122%, right, on a trade, and that is if you haven't put this in at break even already when you got these 2 entries, right? So this here would be your target, because we're looking for a market to create that new 1 hour higher low, and we can also get an entry here because this here is a valid point of interest. And note the time when we got these entries. London session, we got all the entries in London session. Everything was taken in London session, and that's it. Market tapped in our POI and also a take profit area and shoot back to the upside, so we could have gotten entries here as well. Yeah guys, and that's it for this video. I hope you guys learned a lot, and this will help a lot with structure, because as I said before, most people overlook structure because they think that sponsor candles and order blocks and inefficiencies are all that they need to take entries and be profitable while trading smart money. But no, structure is the main thing in any trading strategy that you do. So watch this video over and over and over. This video is priceless.